Welcome to the channel. This is your host, Paul. Today we're discussing Palantir. So Palantir was one of the hottest stocks in 2024, and it recently got downgraded by analysts at Morgan Stanley. So far in 2025, Palantir was expected to be a high flyer. But let's look into this and see will this put a damper on Palantir's run. So first off, when we look at Palantir, what do they even do? They have two sides of their business. One side is a commercial side where they have this data analytics software. They'll go into your company, input it in, and it'll just show you different ways on how to be more efficient. The other side of their business, the government contract side, I like to look at it as the defense side. The CEO likes to call it more of an offensive side. It's a targeting acquisition business for warfare. I'll put it that way. So when we look at the article here, a Morgan Stanley analyst, like I said, they lowered the price target down to 60. Okay. That's a problem. If you're trying to make money in the stock, that's a problem. So let's look at why they said that. So I'm not going to read all of this, but long story short, the analyst was saying the valuation or what the company is currently trading for does not match the fundamentals. It doesn't match the product that they're selling and the money they're bringing in from what they're selling. And essentially the stock is only high because it's super hype right now. So I got the earnings reports pulled up, so let's go look at it. When we look at the last earnings report that they did, it was great. Like, it was great across the board. Revenue up 30% year over year, net income up, diluted EPS, net profit margin, all the numbers across the board were up. But what we get into is, can they keep that up? Because if they can't keep that up, then this stock may drop down even more, way below 60, like maybe in the 40, 50 range. So let's hop over and look at the charts. So over here on Yahoo Finance, the stock is currently trading at $69. So some of the, I'm over on the 3-month chart. Some of the technicals I have pulled up on the chart. I got the Bollinger Bands. And so Bollinger Bands, essentially, you see this top band, middle band, bottom band. So it's a graphic that shows the stock price movement that is in a range. And in this range, the stock lives there about 90% of the time. So you see when it comes out the top, it goes back in. I don't know if you got any instances. Yep, got a couple instances there where it's out the bottom. You see it goes back in. But when we look at this, we're right here at the bottom of the band. So the analyst here said that the stock may drop down to 60. Now, Palantir ran up 300+% in 2024. So I feel like a lot of these big companies missed the run. Even if Palantir was a drop down to 60%, they are in a lot of these indices. They're in the S&P 500, they're in the NASDAQ. So there's constant flow going to this company. So even if they go down, I don't think they'll stay down, because I think what we'll see over the course of 2025 is not if Palantir can maintain that high growth rate, which is going to be a positive growth rate, even if it's in the 20s. But will that number be good enough for Wall Street? That's essentially what we're getting at here. So if Palantir continues to fall, I'm probably going to place a trade on this one. Probably going to buy a call on this one and ride it back towards the upside. So let's hop over here to Webull. see what we're working with. So I have the call only part of the options chain pulled up for Palantir. And I actually like the 60 strike. I like the 60 strike mainly because of the delta here. So when I'm buying call options, I like to pick deltas that are 0.7 or 0.8. So the delta doubles as a percentage chance that strike price that you pick will expire in the money. And that's exactly what you want when you're trading options. That's how you make your money when you're buying calls. So right here, I have the March 2025 pulled up, and I like that 60 strike. So right now, with the current price sitting at 69, it would cost $1,400. So when we're looking at buying call options, is represented in a number that you'll see with a decimal point. And one contract controls 100 shares. So to see what price you may pay, you will take that number, you see the 1445, and you just move the decimal over to the right twice. Boom, boom. Okay, so that'll be $1,400 to place this trade as it is. Now, if the stock actually drops, if it drops and goes toward that 60 price, this same option contract is actually going to be cheaper. So that's why I want to wait a little bit. I want to see if we kind of retreat back somewhere between $68 to $65. So if we get that fairly soon, I'm probably going to strike on this right here, looking to play it up towards the upside. So they have earnings in February 3rd to be exact. So that is going to be the catalyst to push this stock either back up to the 80s, 90s, maybe even potentially $100 range, or bring it down to the 40s or 50 range. So I think, and this is just my personal opinion, not financial advice, I'm not a financial advisor whatsoever, just some random guy on YouTube. I think with the friendly administration coming in, I think this stock is going to rebound. I think the market's going to go risk on. I think Palantir is going to be just fine. But yes, the comps are going to be harder. They have to make Nvidia type moves here, right? Like beating the revenue, like handily, like just really beating the revenue to continue this run that we've seen. It's going to be a challenge for them. But if you watch any interviews with Alex Karp, the CEO, he is confident, chest out, he is confident. And that the way the CEO speaks about their company tells you a lot. It does. So the CEO's confident, I'm confident in the stock. So we'll see. So if you made it to the end of the video, please show a little appreciation, because it takes time making this content. Please like, comment, subscribe. Until the next time.